Study Unit 16. Okay, so when you look at Study Unit 16, you'll see Study Unit 16 is focusing on non-profit entities. Okay, do you support any charities?
Yes, girls, boys, and girls, boys school.
Okay, so is that a non-profit?
Yes.
Okay, so if it's a non-profit is generally a Section 21 company because the company is focusing on a specific goal. The goal isn't about making a profit. The goal isn't about creating wealth for a shareholder. The goal is to help boys and girls, or to help animals, or to help promote sport, or to help promote art and culture. Okay, or it could be anything. Right, so a non-profit is just an entity that's created for a specific purpose, a purpose other than profit. Okay, it's not always about profit. It's also about like taking care of the less fortunate, kids that don't have parents, that are orphans, kids that are maybe they might have certain health issues or problems. Okay, or you get kids like the Smile Foundation, kids with like a cleft lip and all of that. Okay, so there's different non-profits. So that would be one area of it. Okay, then you'd obviously have other things like sports clubs. Okay, so like a squash club, like a tennis club, like a cricket club. Okay, they're non-profits. They're focusing on the sport. Okay, building the sport. Right, so can you think of other examples?
SPCA.
Yes, there we go. Okay, SPCA is a good example, non-profit. Okay, for animals. Right, perfect. So that's what a club is in terms of a non-profit. Do they make a profit in NPO?
No.
But can they have more income than expenses?
Yes.
What would you call that?
A profit.
No one makes a profit. Profit means someone's going to get it. It's called a surplus. Okay, surplus meaning more than what I started with. Okay, so surplus is made but is used to further improve or promote the goal. So if the goal is art, we'll keep making artworks. If the goal is science, we'll do something scientific. If it's charity, we'll give out more to more people. If it's education, we'll teach more people. If it's cultural, we'll build the culture. Okay, so it just depends what the goal is. But if it's a non-profit, it's going to focus on the goal. Okay, so we spoke about a non-profit not making a profit, but they'll have a surplus. Are they still going to have owners though?
I think so.
Yeah, but the owners will be called committee members. Okay, so committee means they're acting on behalf of the club. Right, they're doing things for the benefit of the club. Okay, so you might have people managing the club. Okay. Are we going to show income and expenses? Yes. Okay. What type of income will we get? Well, different types. Right, so they look at sport a lot. So if I have a tennis club or a squash club, okay, I'm going to have membership fees, and that will be for the club. What will that be viewed as? Income or expense?
An income.
Correct. Okay, if it's income, what balance will it have?
Credit balance.
Correct. Okay, so the basic rules still apply. You'll have income here plus. Right, so membership fees is a form of income for a non-profit. Okay, so belonging to the club, paying to be part of the club. Entrance fees could also be applicable. Right, so you need to pay a fee in order to gain entry into that club. Tuck shops, bars, restaurant income. Okay, so you said you play squash at Krugersdorp. So is there a bar or a tuck shop or a restaurant on the premise of the sports?
You pay an interest fee as well.
There you go.
But no membership fees.
Okay, so there you go. So the tuck shop or the bar that's on the premises, is that thing going to be generating income? Yes. Okay, people are going to be buying cold drinks and sweets and chocolates and all of that, and that will be part of the non-profit's operations. Okay, so as a non-profit, we're going to be deriving an income from that activity. Can those clubs get donations? Yes. can they get a bequest? Is part of a will. So if someone had to pass away and they've got lots of assets, they can choose to donate. They call it a bequest. Okay, so your last will and testament. Okay, you give or you leave a certain amount of your estate to certain charities. Okay, maybe you really love animals, so part of your wealth will be left for the SPCA. Or if you really enjoy cricket, you'll leave it to a sports club or a cricket club or whatever the case is. Fundraising is also seen as a income. Okay, so they'll be buying and selling certain things, maybe a raffle, something that has, let's say, a way of raising funds for the club. Okay, could be other things as well, maybe dinners and things like that. Government subsidies. Government can also support certain non-profits. Okay, so giving money to a specific charity that's doing good in a specific area. And then, can a club take out a loan? Of course they can. A club will run like any other business. So a club can also have its own loans. Okay, here's a note about the adjustments. Okay, we've seen them before. We need to recap them. So if I've got income received in advance, what does that mean? It means?
It's a liability.
Why?
Because you owe them a service or product.
Correct. Okay, so if the club has income received in advance, it'll be called membership fees received in advance, or it can be called prepaid membership fees. Right, because think about it. Who pays the membership fee?
The members.
Exactly. So if the members prepay their membership fees, it'll be seen as income received in advance. Right, so they do use both. They either use prepaid membership fees or they use income received in advance. Just think about it from whose point of view? The club, the non-profit. Okay, so what is the effect on the accounting elements? Describe why I debit income and credit income received in advance.
You need to debit income.
Why? Too high, too low?
It's too high.
Correct. Okay, so you just said I've received too much income. So in the year that I derived the income, that income is too high. How do I reduce income? Crediting it. Okay, so if I've received something that I haven't or that I'm not entitled to, I'm going to create a credit for what?
Income received in advance.
Which is a?
Accrued income.
No, income received in advance can't be accrued income. That's a separate one. Income received in advance is a asset, liability, income, expense, capital drawings. Which one?
It's a liability.
Correct. Okay, that's the important bit. Okay, you're creating liability. Okay, you can write down income is going to be decreasing. Why? Too high. Okay, you're reducing it. Makes sense. Okay, what do we have here? Accrued income. What is accrued income? Income that you've earned that you haven't received. So, asset, liability.
It's an asset.
Debit or credit?
Debit.
Good. Why do we credit income? Too high, too low?
Too low.
Exactly. Okay, you haven't recognized enough income. So you need to add to the actual amount. Okay, so you're debiting, you're creating an asset, and you're crediting income, you're processing more. Got that? Right, you can have funds. I've never seen them test this before in any of the exam past papers, but it's something that they cover in the textbook and they mention it in the study guide as well. They talk about funds that can be expendable or non-expendable. Okay, so do you agree if I'm owning or running a club, let's talk about tennis, okay? There could be certain things that need to be repaired. Okay, so if I need to resurface the courts and I'm going to keep a fund for it, is it expensive or cheap to resurface the courts? It's expensive. So I'm either going to have a non-expendable or an expendable fund. Expendable means I can access it, I can use it for other things. Non-expendable means only the proceeds from the fund can be used. Okay, so we're going to save into an account and we can only use what we generate from it. We can't touch the actual capital. Okay, so expendable meaning you can actually use all of it. So buying equipment with all of it. Non-expendable, saving it and only using the proceeds from it. Okay, accumulated funds, you can have entrance fees or retained surplus, meaning we've kept something aside from previous years. Right, so there's the disclosure. What's different here? What do you notice there? What is different on that slide?
Statements of comprehensive income is statements of receipts and payment.
Okay, good. So when looking at a non-profit, is a non-profit going to have, how can I put it, operational expenses? Yes, but it's going to be what they pay and receive because they're running a club. Right, is a non-profit going to have debtors and creditors?
No.
Probably not. Okay, you're not going to have customers that owe you. Okay, because remember, the type of business, business is not the right word to use.
Yeah.
Okay, it's not a business. Okay, it's a club. The type of operation is different. Okay, so as a non-profit, I'm not going to have credit sales and credit purchases. Okay. I'm literally going to be buying and selling using cash, generally. Okay, most clubs run on a receipt and payment basis. Okay, because remember, the club isn't going to enter into credit transactions. Right? The club isn't going to say, well, can we buy, let's say, tennis balls now and then pay for them later? Okay, if the club needs tennis balls for the tennis club, they're going to buy the tennis balls cash. All right, they'll have the funds, it'll come from the membership fees, and they'll pay for it once off. Okay, you're not really going to see other things like credit sales, credit purchases. That just doesn't make any sense for a non-profit. Okay. Right, and the other two are exactly the same. Financial position stays the same, changes in equity stays the same. But the equity is going to be for who? The club as a whole, because no one owns the club. There aren't any shareholders. Right, so when they talk about changes in equity, it's looking at equity for the actual club. Right, so if it's a tennis club, the tennis club actually owns the surplus. Okay, or the tennis club actually owns the assets and liabilities. Okay, there aren't any shareholders or other parties involved. Right, that's pretty much it. That's non-profits. That's literally what we need to look at in terms of theory. Okay, we do need to look at disclosure, so go back to your textbook again. That's the end of the theory.